Good evening, Mr. Chattopadhyay, Ms.
Good
Chaudhary.
evening, everyone. This is Komal Tyagi from Team Taxmann, welcoming you all to today's live webinar on cryptocurrency, the GST Enigma. First of all, I wish to start with a brief about Taxmann. We are the leading publisher of tax and corporate laws in India. We maintain the largest and the most accurate online database on income tax, GST, international taxation, company and SEBI law, IBC, FEMA banking and NBFC, competition law, accounts and audit, and Indian acts and rules. Over the years, we have worked strenuously to offer the solutions that will continue to help you grow your practice. Our 6 decades of experience in the domain has helped us to constantly innovate and enhance our services and take the tax practice to a newer height. We have also developed the national website of the Income Tax Department, and we maintain it with the help of our technical team and the editorial. Now, I introduce our learned speaker for the evening, Mr. Jigar Doshi. Mr. Jigar is a chartered accountant with over 17 years of extensive work experience in indirect taxation. His domain expertise includes GST, customs, erstwhile indirect taxes, and UAE VAT legislation. He has substantial experience in advisory, compliance, refund assessment, representation, and litigation. Jigar has been awarded Young Accountant of the Year 2019 by IAB Awards at London, and he has been a part of the 15-member Indian Group of Ministers meet for simplification of Indian GST return process. Jigar regularly writes for various journals and has spoken at multiple national and international forums. Welcome, sir. This is our pleasure to have you with us. Now, before we proceed, here are some tips for the participants. Your mic will be on mute. However, you may post your questions in the chat box available on your right-hand side. Your questions will be answered by the speaker during the session or after the session by the R&D team. A copy of the presentation on the subject matter shall be sent to you in email for your future references. Now, without taking much time, I request Mr. Jigar Doshi to address the audience. Over to you, sir. Thank you.
Thank you so much, Komal, for the warm welcome, and thank you, Taxmann team, for allowing me to speak on the topic which is very close to my heart. A warm welcome and good evening to everybody. I can see wishes coming on the chat box, and I hope that whilst the slide deck is going on and I will be taking up the presentation, I will also be happy to see the questions which are popping in your mind. So if it is a cryptocurrency world, the question has to be as stupid and as complicated as it can be. So don't hesitate to put up your questions on the chat box. If at all there are relevant questions on that slide, I will pick that up immediately, or at the end of the slide or the section, I will pick up those questions. Would be more than happy to have it more interactive instead of me talking for next 1.5 or 1 hour 15 minutes and not knowing what's running in your mind. So please speak up or write on the chat box. I will be happy to answer all the questions. With that background, let me start the session. We are going to talk on cryptocurrency and crypto exchanges, GST on them, because I can't be speaking in 1 hour only cryptocurrency and exchanges and no GST on it, because it's a very wild world. What I promise in this session is that after 1 hour 15 minutes, you as a participant would have 3 things as a takeaway. One, if not this better knowledge, at least a good knowledge on cryptocurrency as a subject, blockchain as a concept, and GST element on it, on how and where the government is thinking and where one should be looking at. So GST on these kind of transactions is what we will be learning today. But before GST, we will obviously learn about the concept itself. I'm sure you all would have known about the concept, but let us deep dive into it today and understand where it is heading. We'll start with overview. First of all, why are we talking today on cryptocurrency? Why Taxmann and myself, we have decided this topic? Because that is the topic being discussed across, not only in India, across the globe. These are the 3 quick snippets that we have captured in last 1 week. I will just speak about the headings and you'll understand where it is heading. A GST shadow over payments through crypto. This is one of the article. UAE's cipher to put 40% of $100 million crypto fund in UAE. Cryptos, goods or services, work is going on. So these are the articles. I'm not going to read the articles in depth, but you will understand. Everywhere is being talked about on this topic. And let me also confess, there is no conclusion achieved yet, not by me, not even by the government of India, on how and what to tax cryptocurrency as. So it is going to be a very roller coaster ride for all of us. But at least let us understand what are the options available. Few fact sheets, India related and rather cryptocurrency related, I would say. And again, justifying why you need to know about this important topic. First, if cryptocurrency was taken up as an economy, then it would have been a eighth largest economy in the world. You could have understand, the gravity of the situation. If it's an eighth largest economy already out of all the economies in the world, it is such a big platform that which is already running into. $1.77 trillion market is already being there. I believe these numbers are changing dramatically every month or rather every day for that matter. The first Bitcoin purchase was done wherein there were 10,000 Bitcoins given and 2 pizzas were taken back in 2009. So this is just a point you all have to remember, because it's a laughter game where it was and where it has reached. Today, if we speak, I don't exactly know the numbers, but one Bitcoin is equivalent to almost a 32 lakh rupees in INR terms. So that is how big it has become in few years. Global mining income is $20 million. I will explain you all in detail about mining as a process on what exactly happens. We can park that for a minute. Every 2 seconds, there is a social media post on cryptocurrency. There are 14,000 Bitcoin ATMs already available in the globe. In India, there are none. But outside India, there are ATM machines of Bitcoin. You can understand where it is heading, guys. Bitcoin mining is done 72% in China. China, again, as usual, has become the leader as far as such kind of concepts are concerned. There are 309 exchanges already up and running. And there's a shock of your knowledge. Probably you will not appreciate this, but India has the highest number of crypto owners in the world, more than 10 crores. A very classic statement has been passed by Mr. George Friedman, who is founder and chairman of Geopolitical Futures LLC. He says a Bitcoin is neither a fish nor foal, but both pricing it as a commodity when no commodity exists and trying to make it behave as a currency seems problematic. The problem is not that it is issued by government, nor it is unregulated. The problem is it is hard to see what it is. Remember this statement, guys. We will feel it when we go ahead and we start understanding and decoding cryptocurrency. By now, you all would have understood it is important for you all to know this, because the world is going around there and it's better to stay updated is what I was trying to drive here. Now, this is one of the key slides, and I can spend probably the entire session on this, and I wouldn't want to do that. But for the sake of clarity, let me first explain you the concept, and also let me tell you why it is important to learn the concept. Is because it is not a direct tax session that we are talking. We are talking about goods and service tax. Indirect taxes are on transaction basis. So till the time you don't decode the transaction itself, you will never appreciate the GST element or the indirect tax element coming on it. So that's the key reason why we are digressing from GST for a few minutes and focusing on the concept itself. Because once you understand the concept, I believe GST element will come automatically on you. First of all, let us talk about cryptocurrency, and then I'll talk something about Bitcoins also very quickly. Cryptocurrency. Now, what is it that we are talking about so much in detail? What is cryptocurrency as such? Let me try giving an example to you all. The first statement is it's a decentralized authority. Remember these words, it's a decentralized authority. That means that it is not centralized and not regulated. If it is regulated, it cannot be cryptocurrency. Remember these concepts. Let me give an example here. let's say I want to go out and buy a laptop worth 60,000 rupees. What options do I have? I will order it on Amazon or any other e-commerce platform. I will pay them through my banking channels. I will go to my near shop, let's say a Dell showroom, and I will say, okay, I want to buy an i7 laptop and it's worth 60,000 rupees. I select my laptop. I pay him 60,000 rupees. How do I pay? Either I will pay in cash, or I will give him a check, or I will make an online transfer, net banking, or I will do a Paytm or a Google Pay or any other mode of transport which is available as a media. So what has happened is a transaction happened. I purchased my laptop. I became the owner of that laptop, and I pay 60,000 rupees to the manufacturer or to the seller or retailer, whoever it is. In this transaction, friends, what happened is um, uh, I paid money of 60,000 rupees to become the owner of the laptop. When I paid money to them, who recognized that this is my money? There is a back-end work which is happening. Let's say a Paytm transaction. I scan my QR code, and what happens immediately in a millisecond, we get a thumbs up that yes, your account is debited with 60,000 rupees, and that account becomes credited. But who does it? Paytm has a UPI with the bank. The bank will confirm before the payment is done that yes, my account has this much of money, and then it gets transferred to the other recipient. So there is a bank sitting behind, and a banking entire regulation is sitting behind to validate the transaction, and the transaction is done. And that is why it is called a centralized authority. Today, a bank can decide whether they want my money to go to the Dell owner for receiving my laptop or not. If they say no, the transaction is disapproved, it will not be possible for them to give me the laptop, right? The transaction is not validated, they will not give me the laptop. So where this kind of concepts come in is that the banking channel or the channel where the entire regulations are being there are centralized, and that is where the main problem originated when the thought of cryptocurrency came in. The thought came in 2009 by a person called Satoshi Nakamoto. No one knows who is this person, friends. It is a group of people, it is someone else. We have no clue, no one has seen this person. But a concept came in that I don't agree with centralized authority taking charge. Why he said that? Because of multiple concepts which came up. Subprime in US, Lehman Brothers, Satyam, so many matters came up, and we realized that the banking channels can be manipulated and there could be a fraud which can be done so simplified, in a simplified way. So why always to bank upon a bank or a regulation, a regulator for doing a transaction between two people? If A and B are agreeable to do something, why a third party comes and regulates it? Is the thought process which cryptocurrency was originated in. And that's why they said, okay, if a bank or a regulator is not going to validate it, who will going to validate it? And then came the concept of blockchain, where they said that it should be a public ledger, which means that if I have 60,000 rupees today with me, it should be known to the world through the network of computers which are available, and the miners, the person who are going to validate are no one otherwise but a public person. They will validate the transaction, and they will say yes, the transaction is done. So what a bank and accounting clerk is doing at the back end and allowing Paytm to pay the money, that a public person will do through the public ledger review and will allow the money to go from one person to another. This is called a mining activity, and that is where a decentralized authority will come, because it's public who is doing it. And that's why it's called a blockchain, friends, wherein one block is attached to another. And by the way, this becomes a permanent transfer. There is no ways that one transaction is done and it can be redone. No editing can be done. Also, why this regulation was not accepted by so many people is of the demand supply concept. Today, let's say you are having cash with you, and money is being printed by the government of India, right? RBI prints government the currency notes. Today, if we believe the government believes that the flow of the money is not happening correctly, they can print as much of money as they want, and that money can be regulated and flowed in the supply chain in the entire market. So government again can decide whatever they want to do with that money. Your value of 100 rupees will become not valuable as 100 rupees after a day, like the demonetization that which this happened. They said, okay, note bandi karna hi nahi hai ye kaam, ye note अब allowed nahi rahega within a span of time. So they can regulate it as the way they want to, and that is exactly what the decentralized authority concept they don't allow. And that's why this cryptocurrency or a blockchain technology began, wherein publicly the knowledge is available, the ledgers are available, and it can be validated. Once it validates, the transaction is done. So, in a very simple language now, coming back to decentralized authority, if I am having a account, in a cryptocurrency world, you have to say, if I have a wallet, and in that wallet I have one Bitcoin, that means it is equivalent to, let's say, 30 lakhs rupees. With that one Bitcoin, I can go in the market and start purchasing things what I want to purchase. And through that wallet, I can start making payments, and no RBI or no government or no other government is regulating it to allow the transfer. So if you would have seen some news articles in North region, there were few restaurants where Bitcoins were accepted to give food. And there are many other situations also which has become Tesla as a car in the global world, they are allowing payment through Bitcoins and they can purchase the car today. And there are many other situations also, friends, because Bitcoin market is so, the cryptocurrency market is so big. But if you realize the transaction is same, the same Paytm, same wallet exactly is now converted to cryptocurrency Bitcoin, but no banking channels are coming into picture. The public ledger, the blockchain technology is coming into picture, and the transactions are done. So with that background, friends, we have to remember that it's a decentralized authority. So if today a government comes up and says that I want to regulate a cryptocurrency, my belief or my understanding is it's no more a cryptocurrency. It's another form of digital currency which the government will release. But cryptocurrency cannot be regulated. The DNA has to be unregulated. It is free from control by another person, cannot be forged because it's public ledger. You cannot forge it. Lower transaction fee. And uses a blockchain as a base. We spoke about this and I'll move on from here. Issues. What are the issues? Transaction verification is time consuming. We discussed about the purchase of laptop and the Paytm amount being transferred, which happens in milliseconds. Here, time will be consumed because remember, miners have to come into picture. They have to put in an algorithm and agree and validate the transaction. Yes, that it is a correct transaction to happen. In my example, I had one Bitcoin with me in my wallet. If I purchase something which has two Bitcoins, the miners will not validate it and I will not get what I wanted against two Bitcoins because I don't possess it. Correct? So that's where the transaction verification is going to take time. Flood of cryptocurrency. After a success of Bitcoin, everyone came into picture. I don't even remember and number of counts. The type of currencies are there. Last I heard was 4,000, but I believe there are much more now. If miners protest, the entire system can collapse. So similar to the government or bankers, if miners protest, then the entire system will be collapsed. But that is somewhere we believe that it is impossible because now the miners are across the globe and everyone is wanting to be a miner. Whoever is aware about this technology and earn cryptocurrency as a revenue. I'm not going into details of miners rewards, already on my left hand side mentioned on the Bitcoin, but trust me, friends, miners, the way they are working day in, day out, the amount of Bitcoins earned by them, amount of cryptocurrencies earned by them is way too high. A 60-year-old retired person wouldn't be earning so much in his lifespan vis-a-vis a 24-year-old young chap earning through the mining fees. But those are the pros and cons of the technology which we have to live with. So we go ahead from here. One more point. No grievance mechanism is in case of incorrect transaction. So the worst point of cryptocurrency is the fact that it is unregulated, and if you have a problem of any transaction being done, it is done. You cannot take it back. So let's say in my example, if one Bitcoin I've used to purchase a car, and suddenly I feel no, this is not a correct car which has come in, it is damaged. I cannot do anything because that Bitcoin is gone. It cannot be reversed. That is a fundamental theory of blockchain technology. No reversal available whatsoever. It is blocked. The chain is done in life forever and ever. It's not any other way that reversals can be done. Bitcoin, again, now these are the concepts of cryptocurrency. I'll go to Bitcoin for a minute. Bitcoins are the first cryptocurrency. We talked about Satoshi Nakamoto ji and the way he has handled up the things. Again, a complete no man's land. We don't know who is he, how does he look, but he has created this entire atmosphere. No asset backing and no physical form. You have to earn it. And the way I said, friends, that it is regulated. Money is regulated and you can print as much as possible. In fact, if we read more we'll understand even earlier days there was a gold backing which government used to do as a collateral to print the currency. Even those laws are changed. Now gold backing is no more required in most of the economies, including India. So printing currency notes is the simplest thing that RBI can do if required, if inflation comes in, deflation comes in, or whatever it could be. But in Bitcoins, it is very clear 21 million Bitcoins in total will be mined. 2 million Bitcoins are already mined, are up and running in the market. Others are going to come. The last year where the mining will be done is 2140. So all these things are conceptually there. And we can understand how long the person has thought on how and what we have to do. The concept of Bitcoin and the value of Bitcoin, no one knows where it heads. In fact, last 6 months or 9 months, we have seen a great turbulence considering the COVID scenarios where entire world went technologically upgrading. The Bitcoin value went from what X to Y, and it went back to X point something, in between where it is. But frankly speaking, guys, it is a very bullish market. If the world is going to accept this concept heartfully, then I believe it's the thing which is going to come up. So again, apologies if I took some more time, but remember, these are the concepts which will help us to remember and decode the GST space also. So I hope you all are now a little more clear about cryptocurrency and Bitcoin as a subject. Now my slides will take a little bit faster. First, how does it come into existence? Any cryptocurrency, there's a white paper. Today, if you also want to launch a cryptocurrency, you can do it. You have to create a white paper saying what all has been done, what all your cryptocurrency is talking about, and how you want to make it as a listing. It's similar to an IPO, friends. You will then have an initial crypto offer, ICO being rolled out. Transactions will start happening on it. You'll have to keep mining and keep people joining the bandwagon to ensure that it is being accepted in the market. And once the transactions are reaching a level, it can be listed. Once it is listed, it can be used as a valuable asset or money or a currency, the way the government or the country is recognizing. Few concepts again. There is a sender. The transaction is initiated as a block. There are nodes. These are the computers where the mining is done. Miners, who are the people who will mine and validate the transaction. Once they validate, it becomes a part of the blockchain. Once it becomes a part of the blockchain, it is updated in the entire network. So one chain to another chain, and then finally the cryptocurrency transaction is completed. I don't think so we need to take this, but just as a heading, cryptocurrency, we have defined it. It's a digital currency designed to work as a medium of exchange in which transactions are verified, recorded by a decentralized system using cryptography. They call it as DeFi, decentralized finance, DEFI. Mining, we spoke. Crypto exchanges. Crypto exchanges are another simple concept, guys. It is where we do equity trading, and there are stock exchanges. Here there are crypto trading, and there are crypto exchanges. Just keep it very simple in your mind. NFTs, again, I will take 2 hours, and I will ask Taxmann team to give me another session on NFT. But I will speak about NFT again, a very close, very topic very close to my heart, and I will speak about it a little later. But NFT again is a part which is very important and very relevant to know in today's world. I'll take it up as the time comes. Now let us go back to where India is standing. Again, I will be a little more quicker, friends. 2013, Bitcoin begins to trade on multiple exchanges. RBI cautioned citizens on Bitcoins. 14 and 15, cryptocurrency exchange formed in India. Awareness increased. There were exchanges which got formed. 17, no regulation. RBI stated virtual currency is driven by speculation. They all said, boss, this is not going to be a good thing. It's speculated, be away from it. 2018, a circular issued by RBI to banks to stop providing any service to any individual or business dealing or settling digital currency. Crypto token and crypto asset bracket banning, control and regulation bill tabled for discussion. Please note my words. It says banning, control and regulation. This is a bill which got tabled at the Lok Sabha. Petition was filed by Internet and Mobile Association before the Supreme Court. They said that the government cannot stop RBI. The RBI cannot stop banks to deal with cryptocurrencies. It's not illegal. Under what law are we saying it's illegal? And the budget speech said the government does not consider cryptocurrencies as legal tender or coin and will take all measures or eliminate these kind of crypto assets in the illegitimate activities or a part of the payment system. See the next thing what happens is in 19, banning of cryptocurrency and regulation of official digital currency bill got tabled. So again, they said we want to ban cryptocurrency and we will launch an official digital currency. 2020 finally Supreme Court came up and basis the petition they came up and they said RBI circular is to be set aside and said that manifestly arbitrary based on non-reasonable classification and it imposes disproportionate restriction. Again, obviously, it goes against the fundamental rights under the constitution, and hence the Supreme Court had to take this stance that they cannot be saying this is not to be done unless there is a regulation under picture. Allow cryptocurrency trade to be supported by financial system and stated cryptocurrency are unregulated but not illegal. Very categorically, Supreme Court mentioned. Now comes 2021, wherein the cryptocurrency regulation of official bill was tabled. If you see the two bills that were tabled earlier in 17 and 19, there was a banning word being used. And now it is saying a regulation is required, a cryptocurrency regulation of official. The nomenclature and the heading of the bill itself says many things, friends. I hope you are able to catch up. And now in the budget 22, we saw that they have taxed the virtual digital asset, which is nothing but a cryptocurrency. Again, we are not going to talk on direct tax and hence I will not divert. But just to give a heads up, income tax on transfer of virtual digital asset, which is called a VDA now, is at 30%. Setup of losses is not available. 1% TDS on crypto transactions is what the law is now saying. Only cost of acquisition will be allowed as deduction. Mining fees will not be allowed. So this is where income tax thought processes have already been there. GST is not clear till today. GST Angle, government working on classifying crypto as goods or services. We will speak about it, friends, little bit in a slide or two, whether it's goods or service or whatever, because by now we all know what are we speaking. So the government is working on it. Officers opine that crypto is akin to lottery, casino, and gambling on horse race. So it should be taxed at 28%. Direct tax we spoke about. ICAI Institute is working on research paper for guiding its members on accounting and auditing aspects. Obviously, accounting and auditing will also play a pivotal role to decide where it heads and where it is recognized so that we can have a GST or tax implication on it. Crypto frauds, wide array of crypto frauds are being noticed, including money laundering and fake invoice, fake mobile apps. Very quick, three more slides, three more snippets. You can't set off losses. We know that crypto players brace for sluggish growth. When the law got upgraded in 2022 through the finance bill, everyone started, taking a backseat that let the settlement of the law comes in and let us understand what is happening. Then only we should get into it. Otherwise, there's a big loss or a big setback which will be received. So it's going a little slow now on the investment side. Let us go into the GST implication, friends, now. What I've done is I've defined few terms which I will just read out and tell you all, and then I will tell you all the transactions, and then we will be able to marry with each other on the definition and the transaction and see where it heads. Let's say cryptocurrency. The first and foremost question which government is going to handle or is handling is cryptocurrency is goods or service or money. Okay. Money is defined to mean Indian legal tender, any foreign currency check, promissory note, bill of exchange, letter of credit, draft, pay order, blah, blah, blah. Third point is very important, recognized by the RBI when used as a consideration to settle an obligation or exchange with Indian legal tender of another denomination, but does not include any currency that is held for its numeristic value. यहाँ पे अभी सबसे बड़ा क्वेश्चन है फ्रेंड्स दैट वेदर मनी के थर्ड ब्रैकेट में cryptocurrency fit होगा कि नहीं. Why it is important, I will tell you all, because when you see the definition of goods and service, you will understand. And let me remind you, transaction in money is not liable to GST. So if it becomes money, then cryptocurrency, if I have 1 Bitcoin and you have 5 Ethereums and we want to transfer each other, it is transaction in money. It's equivalent to you giving me a 2000 note and I giving you 500 rupees note 4 times, 500 rupees note. So there is no GST on it because we are just exchanging the money, right? There is no problem. If a exchange is in between and exchange is going to charge a money exchange, fair. There is a fees on the money exchanges and there will be GST on their exchange fees. But the money exchange itself is not liable to tax. So another example is, let's say you take a loan from the bank let's say you pick up a 50 lakh loan for a home loan, correct? There is no GST on the home loan because it's a transaction in money, or but there is a processing fee or whatever lending fees, etc. All those are liable to GST. Why it is so? Because the law is very clear. If there is an exchange of money happening, a transaction in money is happening, there is no GST element on it. And why it is important for us to know is that if it is regulated or recognized by RBI, then it becomes money. So first and foremost, the government has to decide whether it is recognized by RBI or not. And if it is, whether we are able to fit here in 275 of CGST Act and go out of that GST element completely. Coming to goods. 252 of the GST Act says goods is every kind of movable property, but includes actionable claim, growing crops, grass, and things attached to, which is fine. But the point is, it's a movable property other than money and security. So money cannot be goods for sure. Securities cannot be goods, but every movable property will become goods. And remember, intangible assets are also goods. In my next slide, you will understand why I'm saying this. Services means anything other than goods, money, and security. So if it's goods, it's not services. If it's money, it's not services. Otherwise, everything is service. It's a residuary definition. Securities is again defined. I will not give the main paragraph, friends, but it includes shares, scripts, etc. And securities are based on underlying assets. SEBI in 2018 responded to the draft bill with a comment that it is not best suited to regulate cryptocurrency. So securities are regulated by a channel which is SEBI. SEBI has clearly said that cryptocurrency is something that they are not going to regulate. And if we align these two aspects, in my view, cryptocurrency is not a security. That's what it appears to me. Again, as I said, there is no clarity or conclusion given by the government of India from GST perspective. But if there is a possibility of fitting cryptocurrency anywhere, it could be money, it could be goods, it could be services, but it is very hard to put it in the basket of securities. Actionable claim, again, a very important definition. Actionable claim, again with Section 3 of TOPA, which is Transfer of Property Act, is defined an enforceable claim to an unsecured debt or an enforceable claim to a beneficial interest in movable property which is not in the possession of the claimant. Now, it can be an actionable claim, friends, wherein if you have a Bitcoin, if you transfer and if you give it to someone, it is a claim, it's like a voucher which can be used for doing something else, like eating food in my example, or taking my Dell laptop, or taking a mobile phone, whatever it could be. So it could be treated as an actionable claim unless defined otherwise. And the best part comes the intangible asset, friends, where you all would have read a 2006 Supreme Court ruling on TCS, where they define software as goods. Now, when we read this, it says software was undoubtedly goods, that it was an article of value. I'm just repeating the Supreme Court statement, sir, ma'am, sorry, the friends here. Article of value having regard to its utility, capability of being bought and sold, and capability of transmission, delivery, storage, and possession. Since software satisfies these conditions, it would be indeed a goods, whether customized or not customized, and whether tangible or intangible. Now, one of the most important aspects, friends, which everyone is talking about at the government level is whether cryptocurrency is an intangible asset. And when I say intangible asset, means that because it cannot be seen, it cannot be felt, it is not a physical goods, it's an intangible asset. It's like a goodwill or a patent or a copyright. It cannot be seen. So whether to treat this as a intangible asset or not, and whether the qualification of definition of all the aspects of being goods is fitting well or not. So in my view, it is high likely chances that they may treat it as an intangible asset. But if it does, then the repercussions would be very huge, which we will speak about. Global inspiration, treat cryptocurrency as asset and property. So if you have a cryptocurrency, globally, most of the countries are saying it's an asset. Put it on the right-hand side of your balance sheet. It is an asset. Whether it's intangible or not, it's a different topic, but it's an asset with you, which is obvious because if you can purchase things, if you can deal things through the cryptocurrency, it becomes an asset. It's like a cash in hand or cash in bank. It's going to be an asset as always, right? That's the same mechanism which it is being looked at. RBI inclination is introduce centralized virtual currency of its own. Again, I fail to understand on understanding of RBI regulated currency. It's a virtual currency, friends, and if at all it comes out, but in my view, it cannot be a cryptocurrency, because if it's regulated, it is a centralized way of doing things and it's not decentralized. I don't know how the world will merge where decentralized and decentralized things can happen together. But so in my view, this is a virtual currency of its own. It's not a cryptocurrency, but they are trying to keep away the cryptocurrencies and have the virtual currency of its own. That's what it appears. CBDT will now tax cryptocurrency and NFT as an asset, virtual digital asset. We said VDAs are going to be taxed at 30%. The FM in a speech also used the term asset. This indicates the government is inclined to classify cryptocurrency as an asset, which we believe now it is happening in that direction. In 2021, a question was posed before the Finance Ministry whether the earnings from cryptocurrency is being subject to tax, and the revert was any income, irrespective of whether it is derived from, should be offered to income tax. Hence, any profits or gains in cryptocurrency should be subject to income tax. They also added that any supply of goods or service which has been exempted would be liable, which has not been exempted is liable to GST. No supply in cryptocurrency has been exempted, and hence it is liable to GST. So, very categoric statement. Exemption नहीं है, GST लग जाना चाहिए. Exemption है तो exemption ले लीजिए. पर exemption नहीं है तो GST लगेगा इस पर. पर क्या लगेगा, कैसे लगेगा? There is no clarity yet. I will speak about it again, friends. The Central Economic Intelligence Bureau in 2020 had proposed to the CBIC that the currency market is very huge and suggests to classify Bitcoin as intangible asset and levy GST at 18% on the margins made while trading in such currency. So if there is a margin that we earn in trading in currency, 18% of GST should be made applicable is a recommendation given by CEIB. We will go to some numbers now, friends, to understand the gravity of these situations. Before we go to numbers, let me try to explain how our cryptocurrency is being used. I'll just take a pause for a minute and I will look at the chat box just to see if it's coming up. Okay, I see many questions. Yes, we all will get the PPT. We have noted your email IDs. Okay, there are a few questions which I will take up in the last. All right, good. Coming to the types of currencies, friends. So the time is 17:38. Fair. So what are the currencies? What are the types of transactions that now that may happen? So we understood what is cryptocurrency. We understood blockchain. We understood the definitions, and we understood that there is a possibility of being taxed when you're dealing in cryptocurrency. Now, what kind of transaction can happen? One, trading in currency. That means you want to purchase currency and you want to sell that currency. Today, market is very volatile. You have money with you. You say, आज अगर 30 लाख का value है एक Bitcoin का, probably 6 महीने बाद 40 लाख का हो जाएगा. No bank FDs or no stock market will give you such a high return. You are happy to put in a high risk atmosphere and you invest in the Bitcoin. You purchase one Bitcoin today and you wait and watch, and whenever you sell it again at a higher value if at all God is kind, and you get the profits on the trading. So this is a trading in cryptocurrency, one option. Second, use cryptocurrency as a consideration medium to pay for any supply of goods or service, or both. My example, मेरे को laptop चाहिए था. I've been to Dell showroom and I paid Bitcoin, whatever that point Bitcoin would be, to purchase that laptop, and laptop I took it. So to purchase any goods or service, you can use a Bitcoin. That's the second type of transaction. And third is the trading in goods or service through the NFT, which is a non-fungible token. We will talk about NFT, and that is the time when you will understand how the NFT system works. But these are the three types of transaction, friends, which may happen as such in the cryptocurrency world. Let us first understand the first transaction, trading in cryptocurrency. If you see the diagram, we are saying that person A is selling cryptocurrency, person B is buying cryptocurrency, and बीच में crypto exchange है. Let's say WazirX, which is there on the newspapers almost every day. So let's say there is a WazirX crypto exchange which is earning the commission income because it's an exchange, right? It will have the own fees for transfer of cryptocurrency from one person to another. The people parties involved are buyer, seller, and cryptocurrency exchange. What are the scenarios that could happen if you just want to purchase and sell cryptocurrency? All parties could be outside India. कोई भी India में है ही नहीं. तो GST लगेगा? Obviously not. correct? The taxable, there is no tax element coming into picture if there are no parties involved in India. Second situation is few parties may be in India. It could be person A and B in India, exchange outside, A and exchange in India, B outside, B and exchange in India, A outside. Anything and everything can happen. So there is a second kind of scenario which may happen wherein out of the three parties, partially some may be in India and some may be outside India, and that is where the trigger point will come on GST. So if an exchange is outside India, first of all, let us understand if a currency is defined as money, then there is no problem because transaction money is outside. But cryptocurrency is defined as intangible asset, then whatever you're purchasing as a currency itself is a activity liable to tax, whether or not exchanges are charging any fees. Exchange ka fees alag hai. The cryptocurrency itself is an intangible asset for which you have to pay GST. So buying currency, if person is in India, B is in India and others are outside, reverse charge lag jayega GST का पूरे currency purchase पे. Intangible asset आ रहा है इसके लिए. It's like a trademark being procured from Singapore to Indian entity, and Indian entity pays GST under reverse charge. Similar concept, cryptocurrency अगर मैंने खरीदा person B ने India में, तो import of service लग जाएगा. Sorry, one second. Yeah. On the exact opposite side, friends, let's say person A ने cryptocurrency बेचा outside, तो यहाँ से जब cryptocurrency बाहर जा रहा है तो money हुआ तो problem नहीं है, पर intangible asset हुआ तो again the entire series of events will happen. You would have heard about 20th century case of Supreme Court of how to tax intangible asset, TCS judgment, whatever, etc., etc. But intangible asset बाहर जा रहा है, export गिना जाएगा कि नहीं is a big question that we have to see. And the worst part comes in that you are not going to receive convertible foreign exchange. So anyways export treat नहीं होगा, तो exempt हो सकता है place of supply के basis पे या taxable हो जाएगा. We don't know right now. So if at all there are any parties which are outside India and in India, then the complexity of import and export दोनों हो जाएंगे. Now comes the third situation. All parties are in India. Again, remember either it's money or intangible assets, or when I say intangible assets mean goods or service or money. If it is money, then no problem. But if it is intangible asset and all are in India, then also there is a big challenge. I'll give you an example. Today, if I want to purchase a Bitcoin, I will go online, I will open my wallet, I will say, okay, I am putting money from my bank account, जो transfer होगा पैसा INR terms में, और मैं एक Bitcoin ले लूंगा 30 लाख रुपए में. अब from where I purchase is an exchange, but from where the exchange is purchasing is probably my next door neighbor. वहां से वो बेच रहा है, यहाँ से मैं खरीद रहा हूँ. We don't know from where I am purchasing because exchanges will purchase and will give it to me. So ये वाले transaction में idealistically we are in the same apartments or buildings, but we don't know इसमें IGST लगेगा, SGST लगेगा, CGST लगेगा, because we remember the wallets are going to be online. There are IP addresses and attachment numbers on it. There is no KYC norms on it, right? You don't know who are you dealing with. So if you don't know who are you dealing with, how are you going to tax them? Even if we agree that it's going to be taxable. So that's the second major problem which is going to happen once the government says that it's an intangible asset. How are we going to tax? I really don't know. And if we start knowing things, then again we will be getting into a regulated market, and I don't believe it's a fundamental concept which will break through. So this kind of concept will come up. What only thing is which is coming very clearly out is whatever exchange fees are going to be earned by the crypto exchanges, उस पे GST तो पक्का लगना चाहिए. उतना तो वो लोग क्लियर हो चुके हैं. इनफैक्ट रिकवरी भी कर लिया है उन लोग ने by doing investigation, which we will see in the few slides ahead. So whatever fees crypto exchanges are going to receive, that is being liable to GST according to the law, and that is where they have already put up the taxable front. Place of supply will be a problem. Treatment of the time of supply will be a problem. If you treat it as an actionable claim, again it's a problem. So treating cryptocurrency itself as money, actionable claim, goods, services, etc. will decide the future or the fate of the taxability in my view. But if you take a cue from direct tax and the government thinking pattern, intangible asset karna hai, so whatever I just spoke about as a problem will be all there to handle. And you can imagine the number of complexities and litigations will begin. And right now we just spoke about trading in currency. Now we'll complicate it further. by saying that you don't only trade, but you trade cryptocurrency because you want to purchase some goods or services. In this example, friends, person A, let's say me, I want my laptop to be purchased. That's the classic example which I've used in today's session. So I'm purchasing a laptop. When I want to purchase a laptop, I have to put up that I want to purchase a laptop. Person B is the person who is selling the laptop, and I want to give Bitcoin or a cryptocurrency which I possess in exchange of purchasing the laptop. So miner will be sitting on my head and getting the validation done, and the crypto exchanges will transfer the money from one person to another, or not the money, cryptocurrency itself, and the transaction will be validated and will be put in the blockchain finally. Now, this is a transaction we spoke about earlier. Where all other normal things happening, parties involved are four: buyer, seller, crypto exchange, and miner. What is simplified is there is a mining fees. If the miner is in India, liable to tax. If the miner is outside India, reverse charge liable if the person is being charged by the miner in India. That is a common thing. Similarly, cryptocurrency exchange, if the exchange is in India, liable to tax by the exchange on the output side. Outside India, reverse charge, GST element. Very much there are mining fees and cryptocurrency exchange fees. So there is no problem as such right now on this front. As far as the concepts are concerned, valuation problems are big time, but concept wise no problem. But the problem comes in for person A and B if cryptocurrency itself is an asset. So it will be equivalent, guys, that it's a barter transaction, right? So let me try giving an example on this. I want to take a laptop of Dell of 60,000, but I give my iPhone 13 in exchange of that, and the transaction is done. From GSTI perspective, barter transactions are liable to GST. So both the transactions, giving the laptop and giving the mobile, from both the perspective is a supply, and there is a valuation which will have to be done, and the GST element will come into picture. Now, if cryptocurrency is an intangible asset, same analogy will be drawn, wherein intangible asset of cryptocurrency is going to the person, and Dell as a laptop is coming to the other person who is giving the intangible asset of cryptocurrency. So if that kind of thing happens, we are talking about a barter world which will be inaugurated through cryptocurrency. It's not money or currency being exchanged, but a barter system which will come in, and you can imagine the number of valuation problems which will come up in this scenario. So that is where the second possible transactions are there. One second, sorry, I skipped it. Whether cryptocurrency, one more aspect, friends, is cryptocurrency exchange, whether they will be treated as an intermediary or not is itself a big question. But I believe in the schema of things, this will come in the last priority, whether they're intermediary or not, and whether place of supply will be outside India or India, because first they would like to define cryptocurrency as something in the law. Then only these things will come into picture, because time of supply, place of supply, all these will follow the suit, whatever the government treats cryptocurrency as. This is fine. Again, it can be an OIDAR service or not also is a question. Mediating agency, because in the online information database access retrievable service, it is defined to have any intangibles through communication networks or internet. I'm not going in deep here because it's a complex world. Let's have the normal complexity being handled. DGI investigation, we spoke about the exchanges, crypto exchanges evaded. The words in the media are very different. Evaded 81.54. My belief is there's no evasion. There is a lack of knowledge on the cryptocurrency and the way things have to be done, and hence this outcome. But nonetheless, evaded or not doesn't matter. What matters is there is a recovery which is being done from almost all exchanges. This was the first investigation, and after that, there are a series of people who have deposited GST element on the exchange fees that they have recovered from the customers and from the people who exchanged, who did cryptocurrency trading. This is a sample. I was able to extract one sample invoice, friends, from one of the exchanges, and this is the sample invoice, how it looks as a commission. So obviously, it says your order is by your limit. The same concept of the stock market. If you all would have seen a broker note earlier, way back in 1990s, it's a similar way the way crypto exchanges have used, and they say this is a value price, and this is the transaction, and this is the commission that they are receiving. Just to give a numerical example, we'll understand the quantum and the magnitude of the work happening here, friends. GST amount recovered as commission income from the crypto exchanges 40.5. In my earlier slide, I said 81. In this example, because of the one exchange value which we got is where 40.5 crores of GST amount was recovered. If I back calculate 18%, which is the tax amount which government has raised, the commission income itself becomes 225 crores for that exchange for that particular year. The rate of commission, friends, you will be shocked to know that it is most of the exchanges are charging 0.1 to 0.2. So for assumption sake, I have used 0.2% as a commission income for the exchanges, and that's why where the value of crypto exchanges which have been traded in the on that particular exchange where 40.5 crores has been recovered, if we reverse calculate, you will come to know 1,12,500 crores of crypto money or other INR terms value of cryptocurrency was exchanged in that or traded in that exchange. So if this entire amount, friends, if they treat this as an intangible asset and not money, we are talking about taxability of 1,12,500 crore in only this transaction, only this exchange. That also 40.5 crores. These amounts are minuscule vis-a-vis the amounts which are right now raised in India only. I'm so talking about. So imagine the quantum of GST amount which is going to come up. Obviously, it will falter the entire mechanics, and the tax amount will take over the entire profits and erode everything. But how to tax, what to tax will be the very important aspect which will be relevant. As per the media reports, one of the India leading cryptocurrency recorded a trading volume of 38 billion in 21. I can't even decode these kind of numbers, frankly speaking, friends, but this is where it is heading. In case the government holds cryptocurrency intangible, the entire trading which we spoke, in March 22, a civic official said GST is levied on the entire transaction of cryptocurrency, then the rate could be ranged from 0.1 to 1%, similar to the gold thought process, friends, where it was 1% earlier in VAT, now 3% in GST. The government is thinking that whether they can treat this as an asset which is liable to tax at a rate which is manageable, but even 0.1 or 0.2%, if even 0.1% I'm talking about in the above table, we are talking about 112.5 crores of tax liability being recovered over and above the 40 crores which is already recovered. I hope the magnitude is understood by friends. Coming to NFT, I have another 10 minutes and then I'll try to put up more on the question answers if possible. So what is NFT? Now, non-fungible token. So we learned about cryptocurrency, blockchain, GST elements, types of transaction that can happen. But this NFT as a concept has been very recently launched. I would not say very recently, but at least recently, and it is changing the way things are happening in the digital world. If I read these lines which I've mentioned in front of you, I believe it will not be. I will not be able to decode it for you. Let me try and attempt in a normal language. Non-fungible assets, something cannot be interchanged, represent ownership of unique items, fiat currency required to obtain NFT. कुछ नहीं समझेगा इसमें sir. Okay, let me try. Today, if let's say I have a book, and that book is what we have authored, and it talks about cryptocurrency, GST on cryptocurrency. So that book is available on Amazon, and everyone and anyone can purchase it. It is a book which is replaceable, it is replicable, and everyone can purchase it. There is nothing unique about it. But if I have one book with me, which I've highlighted, which I have mentioned few notes, which are my personal notes, I've given my signatures on almost all pages, and I've mentioned it on the top of it that this book is very unique because it is covering 1, 2, 3 things, whatever it could be. It could be covering signatures of some department officers, a forward by a friend, Amitabh Bachchan signing up the document saying that, wow, this book is very good, but he signed only one book. Now that big book becomes very unique, and that is not tradable in the market, correct? Now, if I make that book in the digital form and I release this as an NFT, which is non-fungible token, which is a non-replaceable token, non-replaceable asset, and I say that now anyone can purchase this, that is where the NFT transaction happens. So then that book, which I am possessing in the digital form, I would like to sell it, and the value is created. And it is all human psychology, friends, demand supply concept, right? Why today the gold value is so high? Because the demand is there and the supply is limited. If today, tomorrow, if we find gold mines across our roads in all the countries, the gold value will go away, correct? There is nothing relevant about it. Why it is important that gold value is so high? Because the mines are less, gold as is an asset, and the demand supply plays well. Similarly, that book was irreplaceable. Rolex watches, correct? Limited editions. We have only 80 types of manufactured watches in this edition. जिसको भी मिलेगा, we will sell it to them, and people pay donkeys money on it because they like to have those limited editions with them because it is worth it. So similarly, if that book which I have released in the digital form, it becomes worth some value and it becomes a non-fungible token for which the party who wants to take, the person who wants to take this digital form of my book will pay in cryptocurrency. This is what a non-fungible token is all about. So it's a unique item. It could be anything. It could be a song. It could be a movie clip. It could be a literature. It could be a book, a mobile, something which is unique and converted into a digital asset which can be transferred. A very recent thing I saw, even a tweeter, a person who has tweeted, he cropped that tweet and he said, now this is an NFT because this is my customized tweet. It's non-replaceable. No one can make the same tweet from my account on that time, on that day, because it's already done. Now someone wants to purchase, you can purchase this as an NFT, and actually it got sold on millions of dollars because that person was famous enough. So NFT is as a concept very new to the world, but very, very unique, and digital form of transfers of assets will happen through this kind of NFT transactions, and it is going very, very huge, friends. In fact, we will see one or two slides here, and obviously we can relate back to the GST space on it, that if such kind of sales are happening, what will happen when you start selling those digital assets, and how tax is going to be attached to it. Because one point is you are selling not goods but digital goods, and in revert you are getting cryptocurrencies, which itself is not defined yet. But if it gets defined as intangible asset, then there's a digital asset versus intangible assets coming in, and if it's money, then it is liable to tax one way on supply of the digital assets to the person who is paying the cryptocurrency itself. We can see here in a small example, 2021, an auction house Christie sold the most expensive digital art in history, and it was for $69 million. Merely after 1 year, again Christie sold in NFT sales $100 million. Imagine the NFT sales happening through the Christie's auction house was more than the highest expensive digital art sold by it 1 year before. The National Basketball Association converted the video highlights of games and sold them to fans as NFT. They generated $600 million in this. In the third quarter of 21, NFT sales were recorded at 10.7 billion, more than 8 times higher than the previous quarter. I think it's something which is going around in the world and we are just not aware, or if we are aware, we are not able to catch up with the pace, because how many times I read it, I believe there is something which is unique happening around us and we are still grappling with the basic facts. Global trends, friends. Very recently, I saw this almost a week back. OECD has recently launched a detailed framework of crypto asset reporting framework and amendments to the common reporting standards. A very nice, almost 107-pager book or a report which has come up on how to report and what is the framework of cryptocurrency or crypto asset. Very relevant for accounting professions to know, because ultimately it's a guiding principle which OECD releases, and most of the countries will follow sooner or later around it. El Salvador became the first country. This is global trends which we are talking about before I end the session. El Salvador became the first country to accept Bitcoin as legal tender. So very uniquely, countries where the currency is not too stressful. I will not say stressful, but it's not complex world. They would like to treat this as a welcome move, and El Salvador was the first one. They said, okay, we'll treat this as money only or other legal tender, and we are happy to transact in our country wherever these kind of currencies are being used. Let us enjoy and make it legal. Cuba resolution to recognize and regulated cryptocurrency such as Bitcoin has come up. China, government of China, the single largest market for cryptocurrency, declared all as illegal. If you would have remembered my slide in the starting, 72% of mining is happening in China. But the fact is, Chinese government has very clearly said it is illegal because they will not want their currency to be overridden by such kind of currency with digital, and hence they have said it's illegal in 2021. USA is a capital asset, taxable between 0 to 37%. A wide range is given. USA being USA, it is all not concluded yet, but it's a capital asset is what they have said. UK, all cryptocurrency firms, they have direct indirect services within UK market must register the Financial Conduct Authority. It is very similar to regularizing the cryptocurrency firms because they are tracking it very clearly, but they have not classified it as an asset or money yet. Many scams have taken place, putting a regulatory timeline. They have produced a regulatory, this fine. Others, Nepal, Pakistan, Egypt, implicit ban, including KSA, etc., Bahrain, Qatar, GCC countries, basically, they have banned it. Canada, cryptocurrency treated as commodity. Income tax or capital gain tax applicable. They are treating this as commodity, friends. Again, not legal tender. Australia is treated as an asset and attracts capital gain tax, income tax. So it's an asset liable to capital gain tax or income tax. Netherlands, wealth tax is levied. Germany, treat as a private asset. Tax is only levied if sold within the same year as if it bought. I don't know the logic why it is like that, but it is mentioned in that document. Switzerland is an asset again. Cryptocurrency is an asset, is what they have notified. So, if we see, other than El Salvador, and if I remember well, there are one or two countries more very recently who treated this as a legal tender. No one is treating this as money. Most of them are treating this as an asset. Now, it may happen that they treat this as an asset but not liable to GST. But again, they fundamentally in India, I don't think so. That is a way one needs to look at it. So it may be an intangible asset. It may not be a money. And if it becomes intangible asset, it may be taxed at a different rate. Possibility is very much high. But clarity will come in the times to come, where government will step up and say how are they going to deal on the cryptocurrency world. With that, I end my slide, friends, and let me try to see if I can answer a few questions. I can see on the chat box. First question, Guru Mysore. It says, firstly, is crypto legal in India? I heard many of them are getting income tax notices for people dealing with cryptocurrencies. Is it true? Crypto is not legal in India yet. They have tabled, as we spoke, Guruji, that um, uh, it will be a virtual digital asset. So income tax will be levied on it very clearly, but no indirect tax clarity is there. So income tax notices for people, definitely yes, because it's an asset which is now taxable at 30%, and they will have to be paying. What about GST on staking reward in crypto? What is similar to interest on deposit in nature, as currently no, not GST on interest? Yogesh Bhanusali ji. Yes, sir. I'm just trying to decode. What about GST on staking reward? Interest on deposit. Okay, if I understand the question well, is it an interest on deposit in the nature of currency? Answer is no, sir. Till the time they define this as a legal tender, I don't think so it will fit there. They have to either fit as an intangible asset, goods or service, or a money legal tender. If it's forms part of legal tender, then your argument may make sense, because then it will be an interest on money. Could request a record. Okay, fine. Kanaya Lalji Mehta, you have asked, what is economic activity, service, or goods that generates value? Yes, sir, I agree with you. And hence, we took that example today. If you are wanting to purchase Tesla, you can purchase it by paying through Bitcoins. Then that's an economic activity where you are creating a value and you're getting your goods, which is Tesla, by paying the money. And hence, it is the topic of discussion. again, Yogesh has mentioned SBEC cannot be crypto, but it can be used to replace fiat and can be used for trading pair and on-chain transaction done through RBI virtual currency can be traced. I did not get the question, sir. I'll move on ahead. Poonam ji has given the email ID. We have noted all the email ID, friends. We will be sharing the presentation. We share the PPT. Mr. Anuj Gupta has said, if we consider that a person is non-resident, then will 18% is the cost of purchase. Yes, definitely, unless you have uh, output liability to set off the input tax credit that you may be claiming. But another question, Anujji, will be whether you are purchasing this currency for furtherance of business, and as per section 16, whether you are eligible to claim the credit or not is a different aspect altogether. When you're purchasing it and you're using it for furtherance of business, then the credit will be available to you. Thank you, Mr. Chitrajan Chatupadhyay ji. You said excellent. Thank you so much for the kind notes. Okay. Wait a second. All right, I think that's about it. Taxman team, there are many email IDs which I can see on the chat box. If you would be kind enough to note it down and help us circulating this presentation to them, it will really help us. Taxman team, back to you.
Thank you, Mr. Jigar, for this insightful presentation. This has definitely added to our knowledge on the topic. I appreciate the subject matter and thank you for precisely explaining it to our audience. I also thank the participants for being so cooperative. Thank you all for taking time out of your busy schedule and joining us in this session to make it a success. And yes, we shall definitely send you the PPT of the webinar at your email IDs. Though we have tried to reply to the queries raised during this session, yet in case you have any further questions, you may also send them to us in writing at sales@taxmann.com. Thank you all once again. We shall soon be back with another vital topic. Till then, stay safe and have a great time. Bye bye.
Thank you. Bye.